Welcome back to another crypto cruise. Today I am filming on a Sunday. I'm not gonna be doing my Sunday walk because all of a sudden it got really cold and it's snowy and the trails are gonna be completely wet. So that's why I'm doing crypto cruise today. But regardless, I'm gonna be talking about Bitcoin. I'm going to be talking about what to expect this week and overall the market sentiment and everything that we've been going through. Okay, and just share my overall thoughts. Quite honestly, there's not a whole lot of new things that has happened since last week, but you know what? I'm going to share my overall views on everything that has happened and everything that I think will happen going forward. So I did a little digging. Overall, let's just start with the broader market because I think it's important because the broader market is definitely having an effect on Bitcoin and crypto. There's no doubt about it, okay? Once upon a time, we would see periods where Bitcoin was definitely decoupled away from the broader market, and we can make an argument that Bitcoin was in a way standing on its own, and you know, we could see correlations where Bitcoin was standing on its own and deviating, but as of right now, that is just not the case. It's pretty obvious there is a direct correlation, right? And that is due to the ETFs. There's no doubt about it. There's no argument that there's no correlation, and it's unfortunate, but again, you got to take the good with the bad. So I was looking at this. Since January till now, the ETFs had approximately sold off 60,000 plus Bitcoin. That's quite a lot. Overall, the ETFs still hold an enormous amount, over 1.1 million Bitcoin. That's, yeah, a lot. So within a year's time frame, they have taken in more than 1 million Bitcoin. That is over 5% of the total supply within 1 year. So that is why there is this correlation, right? And we have to take the bad with the good, because when things were going up, of course, no one really complained about Wall Street buying up all the Bitcoin through the ETFs, right? So right now, they are selling, and that's why we're taking the bad with the good, right? Overall, is this a complete disaster? Are they selling off everything? No, obviously not. Selling off 60,000 from the 1.1 million is not a complete disaster, okay? And it's not just them too. I don't want to put the complete blame on Wall Street. They are definitely a big part of it, but it's not just them. There are other markets that are selling off. There are definitely a lot of retail investors selling off. There are some whales and miners that are also selling off. So it's not just them, but yeah, there are definitely a lot on Wall Street that are selling off, but vast majority of the Bitcoin in the ETFs are still there. They're still being held. So yes, there is definitely that correlation right now. That's why when the broader market is weak, we are seeing that direct correlation. But in theory, there should be no correlation because Bitcoin should be more like gold, should be more like a hedge, so that when there is fear in the markets, Bitcoin should theoretically go up. More should actually turn to Bitcoin. And we have seen periods like that before when there are more fears about inflation and uncertainty about the environment. We have seen Bitcoin actually rise up. It's just that we haven't seen that recently because of the ETF effect, right? So yeah, so I wanted to start off and just tell you guys why we are seeing that correlation. And it's unfortunate because there are a lot of people that truly don't understand. They bought Bitcoin because, or those that are selling off, they bought originally because they just thought it was a good trade, right? It was the hottest thing and they bought, and that's the reason, and now they're panicking and they sold. That's why. But as for the broader market, we are officially in correction territory. That S&P 500 is officially 10%. It has gone down 10%, which is in correction territory. If you look at the Magnificent Seven, which includes all the big tech companies like Google and Apple and Microsoft and Nvidia and everyone else, Tesla in there, they're all down 20% from their all-time high. And if you're looking at Tesla, they're down over 50% from their all-time high. So obviously, tech has taken a beating. These are what's considered risk on assets. Okay, so when Wall Street does get panicked, they sell off what they consider are the riskiest assets, and they sell it off because they're just not sure what's going to come next. So when they get really panicked because they don't know if things are going to get a lot worse, they rather have cash on hand, so they just sell off everything they think is risky, including the ETFs, Bitcoin ETFs, and all the tech and everything else out there, right? So that's what's happening. And obviously this is happening because of all the tariff stuff, because we just don't have a really good direction right now. Trump is not making it easy for anyone to know what the true direction is, or there's just no true guidance, right? We know the overall, we kind of know the overall theme, but it seems to change every single week, every single day. There's either a new tariff or a change to a tariff, and then there's an exemption to a tariff, and then there's a new one because there's retaliation, and then, you know, there's just something new every single week. If there was some kind of clarity, right? Like, this is what we're going to do, and we're going to stick with it, that'll be fine. The markets would understand, and we would get past it. But within the last month or two, that just hasn't been the case. It's just like, yes, we're going to place the tariffs, and then all of a sudden, 2 days later, oh no, we're going to put a 30-day extension. And then, no, we're going to go through with it. Oh no, we're going to put an extension on these type of goods. And then all of a sudden, no, we're going to put tariffs on them. And then now there's like bigger threats about how Canada, you know, has to become a state now. You know, things like this just not sitting well with a lot of people. Now retaliation with a lot of other countries. You know, the southern one against France and other European nations on alcohol, the 200% tariff, right? And I think everyone is in agreement. Yes, we want to make things fair. And yes, America probably has been taken advantage of for a long time. And yes, everyone wants to make things fair. But like right now, the way things are being done, and again, things are coming out left and right, and there's like no real clarity. This is what is making everyone really unsure. Like, you got to think about all these funds, hedge funds, and these traders. They don't know, so they're holding on all these stocks, and they're like, we don't know if these companies are gonna get hit hard next, right? They're holding companies. They're in the U.S. They're holding companies from other countries too, and they're just like, we don't know, right? So we might as well just like sell everything off and wait until we get real clarity, and then just buy back. That's probably what's happening right now. That's why we get such big sell-offs. Like I mentioned in my stream about Apple, Apple's getting hit hard right now too, because you just think about it, just common sense. Where does all the iPhones and iPads and iMacs and iWatches get made? In China. And you know they're all going to get tariffed. All the products are going to get tariffed 10+% now. So they're either going to eat that or they're going to pass it on to consumers. Regardless, one way or another, it's going to get more expensive, right? That's why they got sold off hard last week. So like this is what Wall Street is doing, right? They're just like either selling off, or they're just trying to anticipate, like, okay, what is going to get hit next, right? So that's exactly what's happening, and they're doing, and some of them are doing that with Bitcoin right now too. So we're just in that period where it's just, we just have to wait it out, right? There are a lot of talks about recession, because while this is going on, because unfortunately while this is going on, we're in this period where, let's take a step back. Before all the tariffs were going on, right? We were in this period where we were going through slowness, economic slowness in the US and around the world. We were looking for capital injections. So it was happening already. Like, we've heard that China's struggling really badly. So they were giving stimulus and injections left and right. And recently, the report about going into deflation is really, really bad. Really bad. So they're really struggling. In the US, we're definitely not as bad, but you know, our numbers are not bad, or not good either. Every number that we're coming out, that we're seeing, is getting bad. Like the retail sales that just came out recently was the worst one in a year. People are not spending as much because there's more layoffs and people are not making as much, and overall rates are still high, and you know, we're not suffering, but we're not doing all that well either, right? So so we're waiting for that injection too, right? And the way we're going to get it is through a rate cut or multiple rate cuts. But the problem is we're not getting the rate cuts because of inflation. Inflation, unfortunately, is going upwards. So we need to solve that. And the problem is when things are getting more expensive, that's not going to help with these rate cuts that we want, right? That's the problem. So that's the thing that we're faced with, right? So that's why there are a lot of people that are very worried about recession. We're not quite there yet. But whenever the stock market starts crashing, that's when a lot of people are really fearful, because that means more people are going to get laid off, because a lot of companies, when they start losing their cash flow and, you know, they start struggling, you know, they're going to be more layoffs, they're going to hire less bonuses, less everything, right? And just less of everything. And plus, if, you know, price of goods go up, obviously inflation numbers are going to show that they're higher, and then Powell's not going to be inclined to cut rates. So this theory that I showed, you know, I said to you guys, whether it's true or not, that Trump wants to do everything and cause chaos, was to try to crash the markets, was to try to force Powell to bring down rates. You know, that actually makes a lot of sense, because if we do get enough if we get enough of a crash, like a huge, gigantic crash, regardless of rising prices from tariffs, Powell may be forced to cut rates. That's only if the crash is significant enough. Like, it's like enormous. Like, it's so bad that it's so worrisome. That's the only way it'll be able to make it happen, right? Otherwise, yeah, it's just like small corrections. I don't think we'll do it. But yeah, I mean, that's why there's so many people that are fearful and stuff. But you know, we're not in that. We're not there yet. Even with the S&P in correction territory, even with the tech sector being down 20-something plus %, right? And even with Bitcoin down where it is now to 83, 84,000, it's not that bad, right? So it's not like everyone is panicking that badly. However, if we do continue, if there is more chaos, if there is more uncertainty because there are more tariffs imposed or more things that we don't even know about that are coming, and it does cause more uncertainty and things do get worse, then yes, then I do think things will get a lot worse, right? So this coming week, we do have more economic data, but more importantly, on Wednesday, we're going to have another FOMC meeting. So most likely, nothing is going to get done. Powell is not going to cut the rate. It's guaranteed that he's not going to cut the rate. It's already baked in. So everyone's going to be looking at like what he's going to say in terms of the next one, which is coming in May. So we're not going to have FOMC meeting in April. We're going to get another full month break. And he's already been asked about like, you know, like in terms of executive orders and working with President Trump and stuff. And he's already said that he wants more clarity around the tariffs and stuff. So obviously he works very closely with he's going to work very closely with the new heads like the Commerce Secretary and the Treasury Secretary. I mean, he's going to work very closely with Lutnick and Benson, but ultimately he's the guy in charge of the rates. So he alone is going to decide, along with the other Fed presidents and governors, right? They're going to decide if they're going to cut or not. And in the past, he just has not been pressure doesn't force him to do anything, basically. So I don't know. I don't think he's going to be pressured. But I don't think he wants to, I don't know. I think he wants to do the right thing, but he also doesn't want to be rash and do anything irresponsibly, right? So basically, he wants to get some clear guidance before he does anything. But overall, everyone wants him to cut rates. That's it. That's really it. And if he does, the markets will react positively and everything will go up. But until then, until we get some real clarity and guidance on all these tariff stuff, we may be hanging around. And if there's more retaliation and more things declared and more uncertainty, then we may be heading down more. That's really my honest opinion. And like I've been saying last week and this week, or just last week, I should say, not this week, because nothing happened this week yet. Short term, it's just like there's really nothing all that good, because we are definitely driven by the broader markets. That's really it. You know, there's really nothing. There's so much goodness. I know, like, you guys are watching me for crypto stuff, right? And I'm not, in this video, I haven't really spoken anything about crypto stuff, but right now, it's all driven by the macro environment and by the broader market. That's why I'm focused so much on it, because it really is. If you look at Bitcoin, right, and you look at the fundamentals, it's still as great as ever. This cycle is definitely different, though. Okay, there's no doubt about it. This cycle is very different because of ETFs. The cycle, and I think all cycles after this, is going to be different. Bitcoin is now, whether you like it or not, is predominantly controlled by the big players, because of the introduction of ETFs. So it will get more and more scarce going forward. And you know, that makes sense, just because the number is getting bigger. Obviously, Bitcoin every cycle is getting more expensive, so that inherently just makes it harder for new people to get in. That makes sense already. But if you're looking at who's controlling it, who's holding it, a larger and larger percentage of Bitcoin will be held by the institutions and by Wall Street, going forward, right? And a lot of it will be through the ETFs. So things will be different going forward. And that doesn't mean that it's all bad, but because of it, I think the cycle going forward will be different. So everything I've said before about, you know, loading up as much as you can before it's all gone, it's more important now than ever, because it's going to be harder and harder and harder going forward after this cycle, to grab a piece of Bitcoin, basically. And maybe people won't realize it, or maybe it won't even be seen, other than the price going to astronomical levels. Maybe that's the reality of it. It's just the price. I don't know, but if you're looking at the overall, like, behind the scenes, obviously, if you're looking at the percentage held by, like, the whales, the new whales coming in, and who they are, the percentage of that is so large and growing so fast. It's outrageous. It's really, really outrageous. And it's actually scary. It's not just outrageous. It's actually scary. So, yeah. But because of it, I think the cycles could also be good, because we can have extended and forever cycles, also known as super cycles, where because of these newer whales or institutions, that we don't have extended crypto winters. We just have a lot of consolidations. We have a lot of corrections, but then we just keep moving forward. That could be a major benefit going forward, because if a large percentage of the supply is being held by these guys that are just holding and they're not panic selling, then why would we have a 80% correction, right? But what it could be a major downside is the fact that a lot of the alts and altcoin season could be forever different, okay? Because in the past, where did all the money come from? In the past, all the previous cycles, when Bitcoin hit a top, the bubble kind of burst, and then the money flew into the alts from Bitcoin. And it was basically a transition from the whales and retail from Bitcoin into the alts every single time. And I lived through 3 cycles where I saw that happen. Okay, in 2013, in 2014, I saw the Bitcoin bubble burst, and I saw things like Litecoin skyrocket in 2014 before it went down. In 2017 to 2018, I saw things do the same thing. And then in 2021, also saw the same thing happen, where a lot of things just like started skyrocketing as well, right? So I've seen a lot of these things happen, and this year, 2025, is the first year of a cycle where I'm unsure that's going to happen because of all the institutions. Because I see that Bitcoin, this rise for Bitcoin is not led by retail. It's definitely led by institutions. So if that's the case, if Bitcoin is not going to have a bubble and retail's not going to take the money out and put it into the alts, right? Are we going to have the same kind of altcoin season like all the previous cycles? And I'm thinking no. Right? So I think that's why so far this cycle has been so different when it comes to the alts. Alts right now, so many of them have struggled very badly. Very, very badly. With the recent dip, even though Bitcoin is still holding around 84,000, which is still a really good spot, still above our last year high, still above our 2021 high. A lot of the alts have fallen to very, very low levels. Some have fallen to, 20. Some have fallen to like 2020. Some never even got back to 2021 levels. Some have fallen to early 2024 levels. Some are, some are back to November levels. Some are just like, alts are just all over the place, right? It's definitely not like previous times. It's not like all previous, it's not like any of the previous levels, previous cycles before. So it's definitely very, very different. So so that's one of the bad things I could see about the current cycle. I don't know. I could be completely wrong about this, but the more I see how we're moving, the more I think this is going to be true. And where is retail going to put their money? I think retail is going to look at what's hot still, right? Retail always looks at what's hot. That's why this cycle so far, memes have been so hot, because retail always looks for what to put their money in that will make them the most money. So they have been putting it into memes and the chains that memes live on, and ones that are kind of like have the cult culture the ones that are like the most loyal, they have the most loyal followings, right? So obviously like XRP, which has done really well. They obviously have a lot of going on, but they have one of the biggest followings, so they have done well. Cardano also has one, and they have done well, and plus both of these are American based, and they have, you know, a lot of American based crypto projects are doing well. They have a lot of connections with the new administration, and they're working on things, but the ones that have the most loyal fan base, they're doing well. But also the ones that obviously have a lot of memes going on are doing well, did well, and the memes themselves did well, right? But as for all the other ones, they are just struggling. They have not done well, and I don't know if they will ever do well because of this cycle, and also because the oversaturation. Because now, even 2021, even though we had thousands and thousands and thousands of projects, since then till now, we have tenfold, 100-fold more projects than then, right? So, landscape even from 4 years ago have changed vastly. Even though 2021 to me seems like it was only yesterday, but man, it's been 4 long years. It really has. But to me, it seems like it's only been like a year. But anyways, this is a long video. I kind of rambled on a lot because I'm only making one video today. So hopefully you guys enjoyed it. Overall, that's kind of my whole thesis about everything. We'll see how this week goes. Every time we have a FOMC meeting, we have a lot of volatility. So the FOMC meeting is on Wednesday. So I'm expecting Tuesday to be not a good day. Tuesday and Wednesday morning probably not gonna be good days because of the FOMC meeting. Tomorrow, I don't know how it will be. Friday, I remember Friday, you know, we had a decent rally day. So tomorrow, I don't know how it's going to be. Tomorrow actually could be a continuation, but it could also be a down day again because the FOMC meeting. But overall, I think we just need more. I think we just need more clarification on. I think overall, everyone's just looking more clarification on tariffs. That's it. If we had more, the market would do well. Okay. If we don't, we're just going to get more. We're just going to get more confusion, and the market's not going to do well. That's really what it comes down to. So maybe we're going to get more clarification. But this week will definitely be dominated. The first half of this week will be dominated by the FOMC meeting. And all the other times we had it, the market did not react well beforehand. So we'll see how tomorrow is. But I'm thinking Tuesday and Wednesday morning will not be well. But tomorrow, maybe. We'll see. We'll see. All right, guys. Smash it a like, subscribe to the channel. And I'll see you guys tomorrow. All right? Have a good one. Take care. Bye-bye.